that's ultimately what we then look at. Is we'll come and have a look at the demand supply ratio that we're seeing across all of our capital cities. So I'll just jump into that chart now. So we go up and have a look at our DSR, our demand supply, our pro, and let's have a look at where we see some of those cities. So we'll start with Hobart, and we can see that it's come off a reading. Now, what's a good reading? A good reading is sort of anything above 60 is where we would start to consider broadly speaking, the 17 variables that we're looking at is showing us an indication that market is potentially out of imbalance in terms of supply and demand. And so it's moved from August of 2019, it's at a reading of 60, and it's now down to a reading of 49. So it's very clear that that's got probably more oversupply pressure, and so that's got downward pressure on future price growth in that particular market. Let's have a look now at Darwin. We can see here in terms of that story still sitting at 49. So although this is a smoky for me, I'm predicting that at some point with incentives, the new government, first home buyers coming in, and the yield story that we're going to see shortly, that this is a market that's going to be one to watch. But it is speculative. I wouldn't be buying in this particular market in my own personal name. It would probably be a self-managed super fund type investment for me. I'm not giving advice here. I'm just sort of saying what I would look at, because it's spitting off cash at the moment. And so that's what I want my super to do.
That's probably an important point, Ben, because even though you say you're not giving advice, you've got influence, across this audience. So the point is, you see that there might be some short-term volatility that you could be in favour of, but long-term, you're also being very measured.
This is a cyclical play. Like, this is a market that I will get in and out of. So you know how we have the buy hold in our long-term weighing machine strategies. Because I only have to pay 10% capital gains on the sale, then technically if I can pick something up and it runs $250,000 or even higher, and then I can flip that property in, say, 3 or 4 years, considering it's cash flow positive pretty much with the yields that I'd be looking at. And I've done that sort of example in Cairns, and I've also done that in the Broome market. So where I'm now sort of looking at potentially exiting at least one of those markets as this new arrival of demand comes in, that's my time to tap out, because I'm getting the bottom of the market and then trying to get that. So that's, again, personal strategy. It's not something that I'd be recommending.
A, it's personal. B, it's active, and C, it's not necessarily playing the weighing.
No.
The weighing.
The other 10 of my properties they're all long-term hold, right, in terms of what they look like. So, but you've got to make sure you're getting a bit of that balance of growth and income as part of that story. And so that's very much a speculative play. And again, it's my strategy. In terms of moving along from Darwin, we'll have a quick look at Melbourne. Now, the interesting thing about Melbourne is that's currently sitting at 64. So that says to us what we were talking before about when we look at those 17 variables, there is still enough activity in this particular market. So even though values are falling off, you can see it's been sitting around that 60 to 64 range over that sort of time period. So it needs something to either drive it forward, or there's going to be something that will bring it back. And that's what we've got to be looking for in future data in terms of what that story tells us. Here's the Brisbane story. We can see it sitting at 59. So that's peaked at one point there at a nice strong 63. So we're basically seeing, that sort of taper off a little bit there. Then we've got Adelaide currently sitting at sort of 62. Again, had a really strong peak at 67. And then we've got the broader Perth market, and we can see that sitting currently at 60 as well in terms of, but that's still doing very well. But the reason why that number's down a little bit is we've got a variable in there called market cycle timing, and that's basically saying that's probably at the back end of its cycle. So that's definitely bringing that score down a little bit at the moment in terms of what that looks like. In Canberra, we can see also sitting around that sort of 59, I think is the score there for Canberra. I'm just going to try and get it at 59. So you can see that's an aggregate market, and remembering we're not buying the capital city either. So this is a generalised sort of commentary, but it gives you a bit of flavour in terms of where each of those markets are currently at to sort of round out our story around demand and supply. Now what we want to do is we want to move across and start talking about the story that is the rental or the income story. So I touched on a little bit before with you in regards to Darwin, but we're just going to go up here and have a bit of a look at the sort of scenario that is the rental story. So we're going to start with vacancy rates. So let me jump back into the research platform and start playing around with vacancy rates.